Hi guys, welcome to Chatter, a newly launched webinar series by Celtic Ventures. Today we're bringing you insights from Hong Kong Science and Technology Park, Sanomics, and Big Idea Ventures. So in the next 30 minutes, we'll discuss the trends of innovation happening across APAC right now, especially in Hong Kong, and how to expand your business across Asia amid a global pandemic. Let me quickly introduce myself and everyone on panel, and then the guests can answer some pressing questions and talk about what they're working on, what are the things on top of their minds right now, and how to kind of navigate the global pandemic, the situation after the pandemic goes away. I'm Grace, a former business journalist, now immersed in the tech and innovation scene here in APAC, providing media and content consultancy to tech companies. Our speakers today include Raymond Wong, the head of investment at HKSTP investment team, Hong Kong's largest innovation technology center. Then we have Stanley CEO at Hong Kong's homegrown biotechnology company, Sanomics, and Christian Cadeo, managing partner at Big Idea Ventures in Singapore. He has brought many US-based startups to Asia, including AdMob, Domo, just to name a few. So why don't we go in a circle and do a quick intro first? Tell us a bit more about what your organization does, what your focus is, and what your priority has been since January, February kind of came along and pandemic kind of hit Asia. So Raymond, why don't you start, and then Stanley, and then Christian.
Sure. Hi, everybody. I'm Raymond Wong, head of investments of Hong Kong Science Park. We are statutory, and we are the largest R&D hub in Hong Kong. What we do here is we have about 800 companies here. Half of them are incubators. And we're growing the innovation and technology hub in Hong Kong. And we have investment ecosystem here. We have a fund, HKSTP Ventures, of about $80 million investing in supporting our partners companies here, as well as we're connecting with the companies here with a lot of investors. So what we do here is we have we have groomed about 600 plus incubatees over the years, and about 80% of them are still operating. Also in the past 2 years, we have raised about 18 billion Hong Kong dollars in the park, just to give you a little bit of stats. And so we're basically here to serve the incubatees and also grow the innovation technology system here.
Thank you so much, Stanley. Stanley, I think your mic is still muted. No, we can't hear you yet, Stanley. Let's give it a sec, a little bit of a glitch here. Christian, why don't you go?
You guys can hear me? Okay?
Yep.
Okay, so I'm losing my voice a little bit, so it's a little bit rusty, but so my role is we run a venture capital fund with offices in Singapore and New York, and what we invest in is a sector called alternative protein, which is plant-based foods and cell-based meat, and we invest globally. In fact, our last investment was a company out of Hong Kong. We're about to do one in GCR, and so forth. I am also on a board of an angel investment group here down in Southeast Asia, helping early stage startups anywhere in Southeast Asia, in Hong Kong, and China, and so forth. So that's what I'm doing right now. And in terms of what we've been doing since the pandemic is we continue to still invest. In fact, we're about to do 13 new investments next week.
Hello, can you hear me?
I can hear you.
Christian. It's okay. Stanley, we can hear you. Christian, why don't you finish your sentence, and then we can move to Stanley for our intro.
Well, all I was going to say was we are continuing to making investments even in this global pandemic. So over to you, Stanley.
Thank you, Christian. Stanley?
Yeah, sorry about Christian. Yeah, sorry about Christian, because I've just tried to get my chat and my I think this is my first time to use my Bluetooth microphone to do the interview, so maybe I'm a little bit heck over this, but I think it's fine now. So hello everyone, this is Stanley. I'm the CEO of Sanomics. Actually, Sanomics is a homegrown Hong Kong-based biotech company. So we're focusing on helping cancer patients to find any genetic mutation, so that we hope that we can help them to optimize and then matching the perfect drug with them. As everyone know that actually we in cancer field, we are stepping in a new revolution about the PD-1, TKI, and some with CAR-T or cell therapy. But actually most of them, we have to rely on very accurate diagnostic testing. And actually, Sanomics not just focusing in Hong Kong. Actually, we focus a lot in Pan-Asia, especially in Southeast Asia. And because actually we do think that there's a huge potential for the demand for the cancer patient in that area, especially for like Singapore, Malaysia, Indonesia, and Thailand. And therefore, actually in 2018 to 19, we have our branch in Thailand and Vietnam, even in Wuxi. And during the pandemic, actually we do get some impact, but actually it seems that the healthcare industry is recovering very fast. And actually our business is going back to be normal. So I do think that there's still a very promising future for biotechnology development in whole world. Thank you.
Thanks, Stanley. And actually following up what you were just saying, your company is a homegrown Hong Kong company, but it's expanded across Asia, over 20 countries now. So can you tell us a bit more about that experience? How is scaling Asia for you? How are, what you mentioned, Singapore, Malaysia, how are they different from the Hong Kong market?
So I think, first of all, the main difference is about the culture, right? Because actually, every time when I talk about a startup, especially for new technology in biotech, I think the most difficult, or the biggest difficulty is not about the technology itself. It's not about the capital. It's not about the marketing. But I think it's the public awareness about the acceptance of the new technology. So I think, to be honest, I think Hong Kong is among the world is the best place to try and to test something new. I mean, no matter fintech, biotech, etc. But for the Pan-Asia, especially for some Southeast Asia country like Thailand, Malaysia, or even Indonesia, I think, according to our experience, it takes a little bit longer time for them to understand that. Even though there's a very relying and promising tool and already proven in like US, in China, but it takes a little bit longer time. So, and the second thing is about, I think, is about the GDP. Yeah, I think because we do feel that, okay, people in Southeast Asia, it seems that they did not get used to pay a lot of money to tackle their healthcare needs. But I think there's quite similar situation like 20 years before China in Hong Kong. But we can see that more and more people is more and more willing to pay for their healthcare healthcare expense. So I think there's main two difference about the China market in Southeast Asia and in Hong Kong.
And as a biotech company, you must have faced various roadblocks when it came to, government regulations, licensing requirements. It must be a bit more difficult than even the other, maybe consumer tech. How did you overcome these? Like, do you have any recommendations for companies who are trying to enter other markets and just kind of facing these roadblocks and hurdles?
Yeah, so I think there's a totally right. I think the regulation is the biggest logistic difficulty for a biotech company to enter those markets, because not every country like Europe or US and China, they have their own regulatory agency like MLPA, NMPA, EMA, FDA. And actually you can see that a lot of countries in Southeast Asia, they don't have this. So even though their government or they do not know how to use a best practice to handle the biotech operation, for example, the specimen logistics. And we do have some experience. I would say that in like 2 to 3 years before, actually, we have some very, I would say, exciting experience about logistics, because I remember one day in Malaysia, we have received a sample from Malaysia for more than 30 consecutive days from Malaysia to Hong Kong. But suddenly, starting in the 31st day of our business, it seems that suddenly we got announcement and noticed that, okay, they are no longer to let us to receive the sample directly from Malaysia. And I remember that by that time, we had spent 5 days, long sleeping day, to reapply the license that, to tackle that, we have to apply a new license to get the sample export from Malaysia to Hong Kong. But this is not just the last and the first scenario we met this kind of trouble. Actually, for example, Thailand, Indonesia, even in Vietnam, they have a lot of similar difficulty happen every day, but not because they are quite anti about the biotech to penetrate their market, but I think they have to take time. I mean, their government to take time to understand what is the best practice to handle this kind of biotech logistics. So to sum up, I think if you want to really enter this kind of market, first, I strongly recommend you enter because there's a huge potential for that. Secondly, you have to be faithful with that. You have to spend a lot of people and power, not just promote your technology, but you have to spend time to tackle their logistics and to cater and adapt their kind of ever-changing regulation for the specimen handling. This is my experience. Thank you.
Thanks, Stanley. And my understanding is you've gone beyond Asia as well. Can you tell us a bit more about your experience expanding outside of Asia as a Hong Kong company?
Yeah, as a Hong Kong company penetrating Asia, I think is a very, first of all, we have already a very good advantage because among in Southeast Asia country, okay, I would say that there major, we have 5 countries leading about in biotech. First is, of course, is Japan, Korea, China, and then should be Singapore and Hong Kong. And actually, we Sanomics, we are doing diagnostic tech. I think diagnostic tech we have a good advantage because first of all, genetic diagnostic is quite a bit of sensitive industry in China. So it's very hard to penetrate as a foreign investor to penetrate in China. And secondly, specimen is not allowed to cross-border, right? So it's very hard for a company in China to receive the specimen from the Pan-Asia market. So Hong Kong is an advantage here. So that means that we can, at the same time, we can utilizing this technology from China, but at the same time, we can receive and handle the need or the patient need from the Pan-Asia country. So I think there's a quite unique features among all the world. I would say that Hong Kong is the best place to do the biotech technology acceleration in the world. And there's a very good platform to testing your technology, whether it's popular and very well accepted in the market.
Thanks, Stanley. And speaking of, accelerations and incubations that you've experienced, like what are some resources or, incubators you would recommend other companies to reach out to or use in the process of fast tracking their Asia expansion plan? Stanley, you're muted.
So first of all, I think I strongly recommend for company like entrepreneur, they focus on biotech, I strongly recommend to join the Hong Kong Science Park Incubate program. Because actually, as a new company, I think you have a lot of fundamental research investment. For example, you need your sequencing machine, you need your screening, testing, validation machine, and that is quite expensive as regarding as entrepreneur. For example, if you want to buy Illumina external sequencing, you have to spend $2 to $3 million Hong Kong dollars. That's quite a lot. But actually, before you stepping in the market, you still a lot of time to testing your reliability and the specificity of your technology. So it doesn't make sense that at the validation you spend a lot of money to buy the machine. So I think there's a good point in Hong Kong Science Park. When you join the program, actually, you can use most of the latest technology, at least molecular testing, no matter Illumina sequencing, digital PCR, on-torrent, etc. So that can help you to speed up and save a lot of money. Secondly, I think as a Hong Kong, because as a Hong Kong government, actually we have a lot of like ETO. I mean the economic trading office in a lot of country in Asia, like for example Thailand and Vietnam. And through the Science Park, actually you can gain a lot of inquiry and a lot of information from them. For example, the tax system in those countries, labor system, and the subsidy system from those countries. So I think if you want to step in those markets, I think there's a good place if you step into this Hong Kong. You step into Hong Kong as a hub or as headquarters to the Pan-Asia. Then you gain the knowledge and information from the government or the Science Park. Then I think it definitely can speed you up and to save a lot of time and cost while to trying the new market in Pan-Asia.
Thank you so much, Stanley. And I know Raymond Wesley will go more into details about some of the government fundings and resources out there as well. Christian, we're going to bring it to you. So you're an expert at bringing companies from the West over, mostly American companies. And we just talked about, how Asia is so diverse through different economies, different cultures, different languages out here. So how did you navigate that? Tell us about the experiences of bringing American companies into Asia.
Yeah, I mean, I think it's tough. I mean, I think it's first and foremost, you got to make sure that the company you're bringing over here is actually ready for it. And so I did 3 of them. 2 of them were ready. 1 was definitely not ready. And the results kind of showed, right? So number 1 is you got to make sure that the company that you're bringing over to Asia is actually ready from headquarters in terms of supporting a remote team, be able to handle different cultural nuances and so forth, as well as making sure that there's investments to actually grow, right? Just because you have one person in the region doesn't mean that you got a business. You actually have to have an investment in that. So that's number 1, right? Number 2 is, as Stanley mentioned, the work in terms of culture, all the countries over here are not homogenous, right? So people who work in Thailand are definitely different from people who work in Vietnam. People in Vietnam work definitely different from people in Hong Kong. So I think one of the things that any new entrepreneur, a new company are thinking about this region is it's just not a one size fit all. So you have to be kind of cognizant of all the cultural nuances of each respective region. That's number 2. And I think the number 3 is, and this is more pervasive towards U.S. company, to be honest with you. So it's kind of a tip for U.S. companies, is most U.S. companies kind of are like bull in a china shop, right? Where they think they could do everything themselves, and frankly, could be kind of arrogant sometimes, right? And that's just not how it works, right? So you have to have some degree of modesty, some degree of being able to work and partner with other people to help accelerate your business, right? You can't think that you know all and be all and have all the capital to actually expand, right? So that's really my recommendation, is those 3 factors before anyone, in order to have a successful launch in Asia Pacific, whatever country it may be.
And do you have any failure stories to share with us? Any miscalculations, maybe that you weren't that sensitive with a culture nuance, or like a political situation or historical context that you just weren't aware of or didn't factor in when you expanded? Yeah.
So probably the perfect example was I was at a company called Just, which is probably pretty prominent in Hong Kong, just because one of our investors was Horizon, which is it's a fantastic VC fund there, right? And we had gotten an investment from Mitsui, which is one of the largest conglomerate in Japan, which does food. So what we did was we did food. We actually sold a product called mayonnaise, right? And so we were looking to ship mayonnaise into Japan, and just kind of being oblivious and more of just assuming because you can sell mayonnaise in the US without any regulation, you could sell it anywhere. We decided to try to ship into Japan. And turns out there's a lot of arcane regulatory conditions in order to bring mayonnaise in, because there's an ingredient, there's a preservative that you can go in. So we wasted a lot of cycles trying to get it in, when frankly, what I should have done was asked our investor, Mitsui, who was based in the country, hey, can you help us out with that? And that's really go to my point number 3, which is you got to ask people for help, right? Whether it's in your immediate network or your broader network, in order to kind of skip a lot of the mistakes that are going to happen if you don't have the necessary help.
Do you have any specific tips for companies who are looking to kind of brush up on that knowledge about Asia, various markets in Asia? How do they go about learning the cultural nuances and the differences?
Yeah, I mean, I think this is relevant to anyone, wherever you are, whether it's Asia, Europe, US, is just network like crazy. I mean, I think there's great organizations in Hong Kong, whether it's Tech Chatter, who could help out, or the Hong Kong Central Park, I think it's a science park that could help out. Is just be out there, network with the community, whatever product you're trying, whether it's tech, it's biotech, it's food, just get out in the community and really network, so you kind of have a lay of the land. And I think that's something where a lot of companies don't do their homework and they just jump head in. And what you'll find out is you can avoid a lot of mistakes if you just kind of network with the right people. So it's easy. I mean, I think you just got to be really outgoing and basically ask for help, and people are willing to help, especially in kind of the time that we are right now.
Thank you. And where do you see the opportunities right now? Is it mostly in East Asia? Are you seeing Southeast Asia? If we had to define the region by areas, where are you seeing the most opportunities for companies or investors?
It depends on vertical. I think on a macro perspective, it's clearly I use this term risk-off environment, where definitely from investors, I think across the board, most of them are pulling back investment or they're doubling down on their existing investments until the pandemic kind of subsides a little bit, right? So I think if you're like a startup or a company or entrepreneur, getting investment from a macro perspective is going to be a little bit more challenging, right? So you're just going to have to hustle a little bit more. But I think in terms of if you break it down into specific verticals, it depends. I mean, I'm in food, in specifically plant-based foods and cold cell-based food, and we're quite bullish. And we are seeing amazing companies apply for investments from Hong Kong, from China, from Taiwan, from India. In fact, we're about to make 13 investments next week all around the world. So I think the activity in that sector is growing. Stanley mentioned biotech is probably the same way. Everyone's kind of a rush to find therapeutic answers to COVID or vaccines, right? But you have other factors, transportations, utility, and so forth. It might be slow. So it's hard to say. I think probably the biggest tip is, if from an investment perspective, is at the end of the day, your what I call hit ratio, meaning you're going to have to go out and talk to 50 investors, and then maybe 10% of them will give you the time of the day. I think that hit ratio, regardless of what industry you're in, is going to increase dramatically, maybe by 2x, right? So instead of 50 people, you got to talk to 100 people. But what's going to be good is you'll be able to find investors who are forward-thinking and are thinking beyond the pandemic. And if you find these investors and they still are there, example, we're still making investments, I think you still have a good chance.
Thank you. Let's bring it to Raymond now. Raymond, you've had a very vast kind of experience in investment, going from investment banking, buy side, and now running Hong Kong Science Technology Park. Why do you think Asia is so attractive to companies right now? And why do you think Asia is so attractive to investors right now?
I think when you are talking about technology investments, it has to be global. And so I think investors all around the world, they are looking at sourcing the right technology globally. And in terms of expansion into Asia from US and Canada, perhaps, Asia contains the largest percentage of population over here. And also in China, there are tons of opportunity there. So I think in Asia, if you're talking about technology, it is a place that cannot be missed. So just overall speaking.
And do you think Hong Kong is a good place for startups to set up shop? And why is that?
Yeah, I think so. I think there are a lot of advantages for Hong Kong because of the unprecedented government support, pulling in a lot of money, supporting innovation technology. There's strong IP protection here. Like normal people talk about the freedom of information flow, specific, one country, two system regulation here. So we are part of China, and also we're not part of China. And also, there are lots, like Hong Kong is the financial center here, so we have tons of international and local investors here. We have the Hong Kong Exchange, which is the world's largest #1 IPO market here, and also we have low taxes. And alluding to the pain points that Stanley has mentioned, and Christian has mentioned as well, because Hong Kong Science Park is a statutory body, we are holding a very neutral position that we can open up doors to the regulators, to the investors, business partners here in Hong Kong, in China, and Southeast Asia. And also we have programs that it's called Global Acceleration Academy, that is very flexible. It could be 1 or 2 weeks time, and foreign companies, international companies can come to Science Park, and we will show them the network here. As Christian has alluded, I think connections is the key. We open up a lot of doors. We will talk to each individual companies and see what vertical sectors they are in, what stage they are in, what type of investors will be interested to invest, and also what partners that are suitable for them. And then we will introduce them to them. We have on our database about 1,000 investors, 250 of which we have very close contact with. And we have 65 concrete business partners in Asia.
Great. So last week on Tech Chatter, we actually talked about the fundraising amid COVID. We'd be really eager to hear your thoughts on this too. Do you think it's a good time for companies to try to fundraise right now, especially companies based in Asia right now? And if so, should they be expecting a lowered valuation?
Right. I think Asia has always been blamed on giving too high a valuation compared to the States. I think now people, because of the COVID-19, valuation will definitely be lowered a little bit. And give you a fact is that for Q1 2020, you are seeing a drop in VC's activities. In Asia is 20%, North America is negative 17%, and Europe dropped 10%. It's natural because Asia on this side was hit earlier. And I think in terms of the investor sentiment, we are going to see the flight to quality. And so we're seeing investors being more risk averse, and they are going to shift the interest to later stage investments. So for raising earlier stage investments will be a little bit tougher, but as Christian said, you just have to keep on meeting people, striking the relationships, and then when COVID-19 is over, then you have the relationship to start on. The earlier you start to talk to investors, the better you are off.
Let's look forward, say post-COVID. Any of you three want to answer this question? How do you think the landscape in the ecosystem here in Asia will change post-COVID? You know, you just mentioned investment might move to later stage investment more, things a bit slower. Any other kind of examples that how Asia might look like in a couple months or even a year or so?
So yeah. So I think Raymond is totally correct, and I think it's very interesting after the COVID-19. Actually, I remember before the COVID-19, I'm quite pessimistic about the financing, but actually it turns out you can see that we can see that the stock has a strong impact, right? But actually you can see, take a look on those kind of medical stock. You can see they have quite outperformed. They actually, the performance is a lot better. Like the stock price has grown 20 to 50%. And actually recently in 18A chapter in Hong Kong, actually we can see almost around 3 new IPO just happened recently. They're focusing on the device, the PD1, etc. So I think to echo the Raymond said, okay, right, for VC it's very hard because a lot of investors they are a bit risk averse. But actually, I think it's after the COVID, most of the investors they understand that seems healthcare and medtech is the ultimate benefit to all. To people in the world. So actually, they would be more willing to invest in healthcare bust for late stage investment. And recently, we can see that a lot of investors they have a new biotech fund. The new fund, and they're focusing on biotech investment. But of course, they're late stage. Yeah. So back to Grace's question about what will happen after the COVID. I think first of all, because as we mentioned, or we've always mentioned that for biotech, we have 4D, the drugs, the device, the diagnostic, and the digital. And I think digital will be a new trend after the COVID-19. For example, you can see some company, a listed company, they're focusing on like the telemedicine. You can see that a huge increase of the stock price. And you can see that those kind of we can see that more and more country or regulated agency they will advocate or to promote about the telemedicine and to break through the regulation, which means to allow to people to do the consultation just through the online, just like we will mention that we will say that there's a kind of a medical Uber or medical WeWork kind of idea. So I think and the second thing is about the real world evidence. Previously, a lot of people they were just focusing on the clinical trial. They were clinical trial data, but since that due to the COVID-19, because people want to keep pushing the latest drug development or this kind of approval of the FDA approval. So it seems that more and more people they're talking about the real world evidence, which means you can use some real data instead of like clinical trial data to let your drugs approved by those FDA or EMA. So I think it's a very interesting trend, and I think this kind of COVID-19 really create a new angle for the new development country. New development company in biotech. Yeah, this is my mind. Thank you.
What about you two, Raymond and Christian? Do you have any thoughts on this?
I'll speak on my vertical, and this might sound self-serving, but I think as it pertains towards food, I think across the board, as people realize, especially in this pandemic where food security is such an issue to kind of the security of each respective sovereign country, what you'll see is there'll be a huge drive for governments to actually infuse a lot of capital into early startups and companies tackling food issues, whether it's food security, different sources of alternative proteins, agriculture, whatever it is, right? So I think you're going to see a huge influx of capital going in from the governments, the private sectors, as well as capital going in. Because I mean, look, you could see what's kind of the impact of the food system with the pandemic. I think the other one, which is a little bit more broad, which will be a good thing, is at least in Southeast Asia, there has been pre-pandemic, there has been a leeriness in terms of having people work from home because there's this whole concept of, if I don't see you, then you're probably not doing enough work, right? So FaceTime, the whole concept of FaceTime. So I think that will go away, thank God, right? Because then it becomes less of just being there in a seat in an office for the sake of being there, but actually being productive. So I think a lot more companies, definitely startups, but I'm hoping a lot of multinationals and older companies in Asia Pacific, whether it's Hong Kong or Singapore, or whatever, are going to basically incorporate work from home because they find that it's actually a viable process that helps them have a better workers, better work environment, and then retain employees.
Definitely, we're seeing a lot of shift in our culture around work and then our consumption behaviors overall. Raymond, do you have anything to talk about when it comes to the change in the whole ecosystem post-pandemic?
I think alluding to what Stanley and Christians are talking about, I think give you some facts for Q1 for this year. The healthcare sector has actually, the interest in VCs has actually increased 47%. Remote work solutions 42%, and also in terms of the telemedicine companies, in Q1 there's like about more than $700 million being invested. That tripled that of that quarter in the past year. So you are seeing solutions what the two gentlemen has been talking about. And in terms of mega trend, I think in China definitely a few themes. One is digitalization. The second is that from the investors' point of view, we are seeing more and more private investors that are more allude to the social causes. The third is that people have changed their perception or their concept of health. So in terms of health, they're looking more on prevention of health and also many different aspects that they have come to be more aware of. So these are the few points I want to share.
Thank you so much. Thank you all for your insights and this insightful discussion. Raymond's colleague Wesley's actually prepared a short little presentation for us on the resources Hong Kong startups can reach out to and what kind of government fundings or resources there are out there. So Wesley, I'm going to pass it on to you, and then we're going to wrap it up later with a Q&A session after Wesley's presentation.
Hello, I'm Wesley Wong of Hong Kong Science Park. I'm going to give you guys a short sharing about the Hong Kong government and Hong Kong STP funding program for the INT enterprises, okay? Do you know how many government and Hong Kong STP funding programs in Hong Kong, and how many of them are related to INT companies, and how much funding support can you get, and who could you ask for help? I'm going to give you some information about this, okay? Okay, actually, I'm working in a Tech One Center. It's an information and support center for technology companies in Hong Kong. It's operated by Hong Kong Science Park. And actually, if you have any question about the funding programs in Hong Kong, please come to find me, and I think I can give you some consultation or advice about these programs. Okay, when we look at actually in Hong Kong, we have a lot of funding programs. When you look at the screen, actually, you can see we have over 40 funding programs. Some of them are offered by Hong Kong STP, and some are offered by the Hong Kong government. You can see these programs are related to technology, business development, and some other specific objective. So you can choose some of them and see who could, get some funding from them. Actually, under the pandemic, actually the Hong Kong government is working a bit hard and providing a lot of enhancement and create some special funding programs under this environment. You can see actually the Hong Kong government has enhanced some funding programs like the bud funding, EMF, researcher programs, postdoctoral program, PSTS, TVP, and TACTUS. And also the government initiate a new program called the Employment Support Scheme, and it provides some subsidies to employers, promise not to make any redundancy. Also, the government, they provide some new program called Distant Business Program, subsidy scheme for encourage some public sectors or private sectors to engage 5G, and some special program related to mainland for special research projects. Also, because the government understand all the enterprises may have some issue with the cash flow problems. So under the SFGS, the government initiate a new 100% concessionary, no interest loan program with 100% guarantee. Actually, because there are really a lot of funding programs, like I said, over 40 of them. But actually, you can start with some easy one, and I just pick up some of them so that you understand what you could get first, okay, easily. Because talent is very important, and when you have a startup or some new company, you need some subsidy for employing some researchers or some talent. The Hong Kong government is offering some researcher program and postdoctoral program, and also the Hong Kong UST, the Hong Kong STP is providing some special student internship program and some accommodation program for non-local workers working in Hong Kong STP. When you apply for these, okay, together with other popular funding programs offered by the government, you can see an ESS program, Enterprise Support Scheme, which is a research-based funding program, and the Distant Business Program, and another one, the PAG, the Patent Application Grant, and some other programs like the EMF and BUD, bud funding. These are related to market development, business development funding programs. When you apply all of them, you could get up to $22 million. So I think when you come to Hong Kong Science Park or Hong Kong to start your business, you could get a lot of funding support from the Hong Kong government and Hong Kong Science Park. Okay, I think it's about my sharing. Maybe I pass to Grace.
Thank you so much, Wesley. I know our session today has been very Hong Kong heavy, so we're going to bring it back. I have a question for Christian. So these questions were collected by Celtigen Ventures before the webinar. And the question for Christian is, when companies are looking to leave their home market and plan an entry into whether it's Europe, US, or Asia, how do you see these three different kind of markets? How are they different when you compare their strategies for companies going into them?
Yeah, that's a good question. So I can't speak for how you would enter US because of the three companies I work for were all US based companies. So for them was really, they were making the determination of whether they should go into Europe or they should go into basically Asia, right? And for them, at least all three, the decision was quite easy. It was really built off a couple of things. One was their investor base. So depending on who your investor is and how their network is, that's quite easy for you to expand in the respective market. So if you have a bunch of investors in Europe, then you probably want to look a little bit highly in Europe because you can tap on the Rolodex to help you expand the business. So that's number one. Number two is, did we have a lot of incoming queries, questions, business relationships, actual business in the respective region? And again, the companies I work for, all their businesses was actually coming in from Asia before Europe. So that kind of made a determination, meaning there was already business opportunities or there was potential business opportunities right away. So that was number two. And I think the third one is really talent, right? So I think for at least two of the three companies that I work for, they hired me because it was opportunistic, where they were able to bring me on at the right time, and they felt like it made sense in terms of an investment. So going back to your question, Grace, those are kind of the vector points that the companies I work for in terms of making determination. One is, where's your investor base? Number two, do you have an existing or growing business in that region, or do you think that you can ramp up pretty quickly? And number three is you got a really solid hire. Maybe he or she is leaving a company and ready to join and heard great things about her, and you want to hire this person. And you want to just to make that investment and make that bet. I think those are really kind of the three primary factors, especially when you're in early stage companies, because outside of that, there's really not much more that you could use to make a determination.
Thank you, Christian. I think that's going to be very helpful for a lot of companies making a decision now. So we got our second question, and it's our last question today. It's for Raymond. Raymond, how should a company go about when they're looking for overseas investors? Do you have any success stories to share with us? Maybe companies you've invested in or incubated that sought out foreign investors?
Right. Perhaps I would just give an example successful case is that for a company, international company is actually from the UK. And what they do is that they come to Science Park. We help them to find the product to sell into, to do R&D in Hong Kong and to sell the product into China. So as a medical device. And so we have found them 3 investors. All of them provide strategic value in addition to money. One is that is very close to the NMDA, basically it's the China FDA. Second is an investor who has a portfolio company with many hospital chains in which they can distribute the product. And the third one is basically someone who has the connection to also a lot of the different hospitals. So all 3 of them actually give them not only the money plus the strategic value. I think that's what alluding to what Christian's talking about. Investor is actually the first thing that you think about. And so they're more than money that you're looking for and more than money that that is provided by them, especially in Asia.
Thank you so much. Any other tips from you 3 to for our companies today? Our participants today who are looking to expand their companies in Asia or in other markets other than their home markets?
Yeah, I mean, I think for me is real quickly is just be tactfully aggressive. No one's gonna help you, right? So go to webinars. Reach out to the team at Tech Chatter, reach out to the people on this panel list through LinkedIn, through whatever it is, right? For the most part, everyone wants to help. And I think if you're respectful and you're tactful and you make it pretty crystal clear communication on what you're looking for, I think people are going to, especially now, right, in the pandemic, people are definitely going to give a willing hand to help out.
Thank you. And Stanley, I saw your hand up.
Yeah, so I think I totally agree with Christian. So I think because of the COVID-19 epidemic, actually we cannot fly to those markets directly to do some research. So I think before everyone, if you really want to invest in biotech at this moment, the best thing is that take time and study at home, but not about the marketing or not about the investment or financing, but the regulation. Because actually a lot of healthcare company like no matter pharma, diagnostic or device, trust me, I think the biggest hurdle is not about the investment of the money, but about the local regulation. For example, which kind of category is sensitive, which is not, which is more, the practice, the practice of the local hospital, whether they would use your technology is not about their preference, their favorability, but about the top regulation. For example, in Japan, you have to pass the MLWH first instead of to use just LDT model. So I think it's a good time for everyone of you just stay at home, but still a lot of things to do to study about the regulation and the best practice in different country in the Pan Asia.
Thank you so much. Thank you, Raymond. Oh yes, Raymond.
If I can, the last word is that 2 advice. One is to extend your runway as much as possible. Second is to be opportunistic, and I think reaching out right now, everything is online. Reach out to Science Park. We're here to help and connecting you to investors, to business partners, and also talents. Thank you.
Thank you so much. Thank you, Christian, Raymond, Stanley, and Wesley. Thank you for your time today.
Thank you, everyone.
Thank you.
Bye.
Bye.
Bye-bye.
Bye-bye.